Hi, I'm Mike Stanton. It's May 5th. This is the BAM Weekly Muni Market Update. I'm here with Morgan Fahey from BAM's Capital Markets Desk. Morgan, there was a lot of news on the calendar this week. The Fed met this week and made its latest interest rate decision. We also had non-farm payrolls for April this morning. How did the news play out this week, and how's the market reacting?
Sure. So despite the Fed week, we did see a decent sized calendar of about 6 billion. We saw outflows continued for the 12th consecutive week, and treasuries were tighter on the week. So as of this morning, prior to the news that you're referring to, the 5-year treasuries were about 26 basis points tighter, 10-year were about 14 basis points tighter, and the 30-year was roughly unchanged on the week. To kind of compare that to munis were anywhere from about 7 basis points tighter in the 5-year part of the curve to about 3 basis points tighter in the 30-year. And kind of going back to the data that came out this morning, so it definitely highlighted the strength of the labor market. The non-farm number came in at 253,000, which was higher than the estimate of 185,000. And we also saw the unemployment number came in at 3.4% versus the 3.6% estimate. So on the back of those numbers this morning, we are seeing Treasury sell off a little bit. So the 30-year at the time of this video is hovering right around kind of a 377. And then kind of looking back to Wednesday, the Fed raised 25 basis points, which I think the market was, had priced that in. It was definitely kind of what people were expecting, to a range of 5 to 5.25. And it seems like the market is kind of continuing to digest the banking news as that comes out. And honestly, it seemed like people were more focused kind of on, clues for future moves or lack thereof, as opposed to the 25 basis points from this week.
And certainly at the time, I think a lot of people thought that the clues for future moves were that there might not be any, right? The feedback from Chairman Jerome Powell was that this might be the last tightening in the cycle. Today's news showing the strong labor market has, I think, changed some people's minds on that, although it was accompanied with downward revisions to payrolls for both March and February. So maybe on net, there's not that big a change in the outlook, and they will let the economy see more time. As you mentioned last week, $6 billion, still lighter than usual. A lot of issuers were avoiding the market because they were concerned about volatility. Next week's calendar mounts a little bit. I think it's a little over $8 billion, right? What are you keeping your eyes on?
Sure. So last week we still had, some decent activity here. We're priced around 55 million across 9 series in 6 states. One deal kind of to highlight from last week was the 18.5 million Glendale Union High School District in Arizona, which was priced by Stifel. And, as we look to next week, as you said, calendar's building a little bit, which is good to see. One deal that we'll be watching here at BAM is the 100 million City of Fresno, California airport revenue bonds, which will be priced by Raymond James.
And for people looking to learn more about that transaction, we do have a BAM Credit Insights video on our website about that. Mark Capel from the West Coast region discussed the airport and its recovery from COVID. Really a nice real life stress test for a revenue backed bond. And so he walks through that in our Credit Insights video. Feel free to take a look. Okay, Morgan, thanks for your time this week. We'll talk to you soon.
Have a great weekend.